Welcome to this video on beating the price rise. We will explore real estate, gold, and stocks to find the best inflation hedges and protect your savings for a secure future. First, what exactly is inflation? It's like a silent thief that makes things more expensive over time, eroding the purchasing power of your money. Inflation means your money loses its power. For example, at a 6% inflation rate, a meal that costs 100 rupees today could cost 250 rupees in 15 years. Your money loses half its value every 12 years. To combat this, we have three main shields: real estate, gold, and stocks. Each offers a different way to protect and grow your wealth against rising prices. Real estate is a solid asset because it is a physical asset with limited land supply. Historically, its value grows as cities expand. A plot in a developing area in India often doubles in 7 to 10 years. Real estate wins with monthly rental income, unlike gold, providing a regular cash flow. It also offers physical security and significant tax benefits through home loans. However, real estate has its challenges. It requires a high entry cost, is hard to sell, and involves ongoing maintenance costs for repairs, whitewash, and taxes. Gold is the timeless shield, valued for thousands of years. It's the ultimate safety net during economic troubles, with prices rising during war or high inflation. It is often the first thing people buy in a crisis. Gold's advantages include being easy to buy and sell, providing crisis protection as an emergency fund, and requiring no maintenance, unlike property. The challenges with gold include storage risk, as keeping it at home is risky, and lockers have annual fees. It provides no regular income, only making money when sold at a higher price, and requires caution regarding purity. Stocks are the wealth builder, allowing you to partner with top brands like Tata or Reliance. As these businesses grow, your money grows. For instance, 10,000 rupees invested in a top Indian index 20 years ago would be worth over 1.5 lakh today. Stocks win with the highest long-term returns, often beating gold and real estate. You can start small with a systematic investment plan, and they provide liquid wealth, easily withdrawn in a couple of days. The challenges with stocks include market fluctuations, emotional stress from price drops, and the requirement for knowledge to select the right funds or stocks. Looking at 20-year returns versus inflation, stocks show the highest growth at about 14%. Gold and real estate follow, while inflation's cost rise is approximately 6%. When deciding which one to pick, consider your time horizon. Choose gold for 1 to 3 years for safety and quick cash access. Pick real estate for 5 to 10 years for rental income. Finally, choose stocks or mutual funds for 10+ years to achieve maximum wealth. Don't let inflation diminish your savings. Start your journey today by consulting a financial expert and investing a small amount to secure your future.